After a turbulent year for the global dairy sector, marked by weaker demand, falling commodity prices, and mounting pressures on producers, we're taking a step back to understand what really shaped the market in 2025 and what dairy farmers and buyers should be watching as we head into 2026. I'm Johanna Bota, and joining me today to help us make sense of the trends and the road ahead is Nate Donnay, Director of Dairy Market Insights at StoneX. Welcome, Nate.
Thanks, Johanna.
So, if you had to describe the 2025 dairy market in one word, what would it be?
I think the defining characteristic for 2025 is probably collapse. It's really been a story of two halves, with prices for some dairy products still increasing in June or July before absolutely falling off a cliff in August, and really August through December here. And the collapse has been fairly broad-based across most dairy products and across the major dairy exporters from the US, EU, New Zealand, and South America. Really, the only dairy product that's kind of bucking the trend has been whey prices. Just about every other dairy price has been declining.
So, what drove the collapse in prices?
Well, uh, demand's not helping a lot, but I think we can blame most of the weakness on the supply side. We had generally weak milk production from 2021 through mid 2024, 2025, and that relatively weak milk production helped to push milk prices up to profitable levels for dairy farmers.
Hmm.
And that strong profitability in 2024 and 2025 has encouraged farmers to increase milk production. So we've had this strong farm level profitability that's helped to boost milk production. And on top of it, some of the disease issues that negatively impacted milk production in 2024 have not been as big of a negative influence on milk production during 2025, including blue tongue in Europe and bird flu in the US. When we step back and look at this from a long-term perspective, production growth across the major dairy exporters typically averages about 1.5% per year. In September and October of this year, production was up about 5.5%. So production growth is running about three times the normal pace. And I think we can blame most of the price weakness on that supply growth.
Okay, so that's on the supply side, but earlier you said that demand isn't doing a lot to help prices either. What's happening on the demand side?
The story's mixed depending on the product and the region that you're looking at. The one consistent story that we're seeing is greater demand for high protein dairy products. That's the most apparent in prices for whey protein concentrate and whey protein isolate. We've partnered with a price reporting group called Expana to add WPC and WPI weekly dairy prices into our interactive data platform called StoneX Plus. And if you look at those weekly reported prices, they've continued to trend higher through 2025, and we're hitting new record highs here in December. And we're also seeing good demand for yogurt and cottage cheese in both the US and Europe, which is part of that story where consumers are looking for more protein. Some of this good protein demand has been in the market for a while. It was established before these GLP-1 medications came to the market, but it really looks like the GLP-1s have entrenched it and accelerated it. Now, one interesting development, kind of counter to the strong demand that we're seeing for high protein dairy products, is in the US, it looks like per capita consumption of cheese during 2025 is going to be down. And this would mark a
Hmm.
second consecutive year where per capita cheese consumption is declining. This is, at least in my data, this is the only time in the past 45 years where we've had two consecutive years of per capita declines in cheese consumption. It's possible these GLP-1 medications are having an impact on this, but it's hard to say. In comparison, our estimates suggest that cheese consumption in Europe is still growing, so whatever's negatively impacting the US is having less of an impact for Europe.
I can't imagine cheese not being eaten in Europe, so I think we'll be fine in that department. So, looking ahead to 2026 then, what do you see as risks and or opportunities for dairy producers and traders worldwide?
Supply growth is still the biggest bearish risk, at least for the first half of the year. With farm gate milk prices now falling and margins getting squeezed, we should see supply growth slow down, which starts to give us some bullish risk for prices somewhere in the second or third quarters, depending on how quickly and by how much milk production growth slows down. With the exception of US cheese demand, the demand side is looking a little bit better than expected for early 2026. We've seen global import demand improving as buyers take advantage of the lower dairy prices in recent months, and the cheese and butter demand in Europe looks a little bit stronger than expected at the end of the year here. And then you throw in this demand for protein products.
Hmm.
Overall, the demand side doesn't look terrible. It's just that demand may be growing at 1.5 to 2%, and milk production is growing at 5.5%. I do have concerns about U.S. cheese demand, but in general, the risk is that prices are weak in the first half of the year, and then we get a rally in the second half of the year, with the strength of the rally dependent on how dramatically milk production slows down, and the timing obviously connected to the timing of the slowdown for milk production.
Understood. Nate, thank you so much for all your insight. And to our viewers, from all of us here at StoneX, we want to wish you a wonderful holiday season and a happy new year. Thanks for watching, and we'll see you in 2026.